Good afternoon, everyone. Hope you're all having a wonderful Thursday. On behalf of the Edge Technology Conference and Trellens, we would like to welcome you all to our fourth and final session of the 2024 Edge Encores webinar series. This series of webinars brought the four most popular 2024 Edge Technology Conference breakout sessions to the digital space. Are you ready for 2025? We'll get ready because the Edge Tech Conference will be going to Las Vegas May 7th through 9th. Mark your calendars and be on the lookout for more registration information coming soon. So with that, let's get started with our fourth webinar in the series titled Building Digital Relationships Through Partnership. During the session, we'll sit with Michigan State University Federal Credit Union as they lay out real-world results and data from MSUFCU's own piloting of various fintechs. Today, we are excited to have with us Ben Maxim, Chief Innovation Officer at MSUFCU. But before we jump in, I'd like to go through a few housekeeping items. First, this webinar is being recorded and it will be made available to all after the session concludes. Second, due to the large audience, the phone lines have been muted. And lastly, we want to hear from you. There will be a Q&A at the end of the webinar. If you can think of any questions during the duration of the webinar, please feel free to type them in the Q&A box and we will do our best to answer. If you have a question that does not get answered by the end of the webinar, please send our team an email at info@trellens.com and we will get back to you in a timely manner. You can also answer yes to the poll that's on the screen right now, and one of our Trellens team members will reach out to you soon after the webinar concludes to discuss the topics that happened during today's session. Thank you all again for being here for this webinar, and without further delay, here's Ben.
All right, thank you. All right, welcome everyone. Thanks for joining us today. I'm going to go through, and very excited that everyone liked this presentation the first time around, and I get to do it again for you all. So without further ado, we're going to talk about how to build digital relationships through partnership. And really the idea behind this, credit unions being relationship-based organizations over time, that used to look like people visiting our branches. And they would tell us all kinds of information about us, and we kind of collect that data through our employees and be able to personalize those services. Well, now people aren't coming in every Friday or every other Friday to deposit their paycheck in person. So, we're not seeing them as often. Maybe we see them 4 times a year or maybe once every 4 years. So how do we kind of continue to build those relationships when the primary delivery channel and interaction channel and engagement channel for our members is through digital? A little bit about myself. I've been at Michigan State Federal Credit Union. I guess now it's actually just over 17 years as of July 30th. Currently the Chief Innovation Officer there, and also have a role at our subsidiary as Chief Operating Officer at Reseda Group. Reseda Group is a holding company that both builds fintech solutions and also invests in other QSOs to help curate an ecosystem of technology providers for the credit union space. If you'd like to connect with me afterwards, there's my LinkedIn profile. I also still, and yes, I call it Twitter still, interact on Twitter a little bit if you want to connect with me there if you're still using it. All right. So talked about, Reseda and MSUFCU, and this is kind of how everything relates. We have our innovation lab, the lab at MSUFCU, under our parent brand, MSUFCU, and we created a separate brand for our innovation and exploration of fintech partnerships to give an opportunity for us to play and experiment and get our members involved early in the process. And by having that separate branding, we're able to put things out that maybe not be fully polished or still an idea, are seeking feedback, and our members know to engage with it in that way. And they're not expecting, maybe to call the call center the second everything, one thing doesn't work as they're expecting, like maybe with a full-fledged product, as you should expect, things that are being delivered out. So really adding that branding has allowed us to play and really get our members involved in the process. We have a foundation that supports a number of initiatives in the community. And then we also have 2 affiliate brands, really with a primary focus in digital space, Alumnify for those that have left college and university, and then Collegiate Credit Union for those still at the university. And we have another brand as well, Oakland University, through a partnership and experience through Michigan State University was Michigan's Oakland University, was Michigan State, Oakland County, or Rochester Hills long ago. And then they switched to be their own independent university, and we've maintained a presence there ever since. Other credit unions or other colleges in Michigan found out what we did there, would love for us to come create a whole brand for them, but are not able to do that. It costs too much money to stand up a brand if a university only has about 1,000 students. So we created Collegiate as an opportunity to partner with all those smaller universities and colleges within the state of Michigan and elsewhere. Reseda Group, like I mentioned before, is our fintech holding company. This is where a lot of our partnerships end up to really grow them after they've been tested in the lab. So we test things in the lab, then we move them over into Reseda Group to kind of help them scale and incubate them further. We have 2 products that are in market. We have Evergreen, which is a financial education solution that came from the creation of financial education stuff at MSUFCU over time. And One Click Financial, which was one of these solutions that we wanted to test out in the lab and ended up bringing that in and bringing it over. It's a personalization solution that really allows for a platform to connect all these different cool fintechs and providers and content to get personalized experience for our members. So really that is one of the ways we are building that digital relationship is through these solutions. There are a number of other QSO investments, so we are minority investors in those. So a lot of these are every single thing that we invest in, we do put into place at MSUFCU. So these are a good representation of our partners as well, and some of the ones that have been more successful as we've gone through in making those connections and engagements with our members. So to kind of set the stage a little bit further, this is now becoming a little bit dated, but we did some research, or Salesforce did some research back in 2020, really looking at how do customers, generally expect to interact with the world and what are their expectations. So, the thing to highlight here, and this is what are the most, it's down there at the bottom, the most customer-centric sectors, according to those customers. Said healthcare, which is very interesting to me, but I guess it is a personalized experience, but you wouldn't have expected to see that one in the top 3. But travel and hospitality, retail, those make sense. If they're not customer-centric, those businesses won't be thriving. But the bottom 3, you see financial services, they're listed in between manufacturing and government, which makes sense. They're not necessarily customer-focused, but unfortunately we're there. So how do we, change our image? How do we show ourselves to our members, customers, and really help them understand, hey, this is who we are, this is how we can serve you and personalize the experience for you, just like you expect to see when you're interacting with, kind of these big digital experiences like Amazon or Netflix or Instagram or, some other services that people use daily. So here, your true competitor. So there's now a dated image of Instagram as well over there. But really, we're seeing companies that are being successful and really dominating the day-to-day lives, or in terms of engagement with, also our members through, personalization. So Netflix tells you what you should watch before you want to watch it. Amazon, same thing. So telling you what you should buy before you even knew you wanted it. Instagram is also curating, content for you as well. So all of these companies have figured out kind of that secret sauce, and how do you leverage, data in a meaningful way to provide a personalized experience. And because of that, they are companies that are, over time building this massive user base that really allows them to have a lot of influence on society, and also influence on how people expect the digital world to be, which means we also have to compete in the digital space, not just with, big banks or other credit unions and each other, but really here is the, mind share competitors that we have in that digital experience, and they've done a great job, and these are great examples of building digital relationships with end users, customers, members, and we can learn some great lessons from them along the way. Another poll that happened in 2022 found that 8 in 10 Americans are already using digital banking apps. I think we knew a lot of them were. It's kind of become a standard. 15 years ago, hey, it was great if you had a mobile app that could show you your balance, didn't have all the features. Now it's an expectation that you can do everything on your phone, right? The other interesting stat is people are also using at least 3 fintech apps on average. You see some of the examples here. Some of the bigger categories have to do with payments and money movement, bill payment, filing taxes, online banking, of course. Then also a lot to do with investing, budgeting, and lending. So, these are opportunities. These are all things that credit unions already do. So how do we, again, get people to look at us for those? And the reason they're choosing all these different experiences is because they find the experience to be rewarding. They're building a relationship with them. They're connecting with them in a way that's personalized and connecting in them in a time of need when they need it. Partnership as a strategy. So MSUFCU has decided, when I started the credit union 17 years ago, I joined as a web developer. We had this philosophy of trying to build most things ourselves. A couple of years into my career, we decided to build our own digital banking. And that allowed us to not be beholden to a massive vendor and allow us to be responsive to our members. And allowed us, again, to get us to the point where we are today, where we're, member-centric in our digital offerings. We also, and we're leveraging that to build those relationships, collect the data, see what members are willing to tell us about themselves beyond what we can already see within that transactional data, to then use that and then further customize it. We're looking at these partnerships as niche offerings and really creating this menu of fintech solutions that, fintech A may serve, 50,000 members, fintech B may serve 10,000 members, and then it's kind of up to the members to kind of grab what they'd like, just like we do on our phones today. So we're using the phones as kind of the operating system, to kind of curate the different digital experiences we want. Credit unions have the opportunity to do the same thing. Our members want to, really pull in and, find one place and use us as that kind of source of truth or the kind of trusted advisor. Well, here's the opportunity to share some solutions that can help them that we may not be able to provide ourselves with the resources we have. It allows you to drive digital engagement beyond transactions. When we set out down this path, our goal was to figure out how to get people to interact with us more as a brand and not just to come check their account balance, move some money around, and then we'll see you again in a month or 2 weeks later when your paycheck came in again. And if they're on auto deposit or auto transfers, we may not see them at all in the digital space unless they need something. So really giving people a reason to log in and engage with us, just like we used to give them a reason to come into the physical space and engage with us there. And that's how we're able to start to really, truly build these relationships, by providing the reasons to come interact with us, curating the experience. Again, that's what I'm talking about. We can offer things beyond our core offerings to really extend what can we do. And you kind of think of that membership for Costco or Sam's Club. If you're a member of Costco or Sam's Club, they may or may not have the cheapest thing, but you think they do. And you go there first and you want to buy it from them because you know that it's trusted, and we have that same opportunity through our membership in the credit unions. Then go beyond digital. I think our secret sauce that, a Netflix doesn't have, there's no Netflix store. You can't go talk to someone if you get in trouble. Hopefully you're not getting in trouble streaming movies. But, people have a lot of complex things in their financial life. It's an intimate experience. It really is the enabler of everything they want to do. And sometimes those situations get more complex. So there are a lot of things they can self-serve and do on digital, but when they need help, they want to be able to come in and interact with someone. And, there's kind of this misnomer that Gen Z doesn't want to be in a branch. They're actually one of the biggest users of our branches, not just because we're university based, but because they're hitting these complex situations where they're buying a car for the first time, or they're buying a house, or whatever they're doing. Maybe they got an inheritance. Maybe they, are trying to figure out budgeting. They're looking for that trusted advisor and someone to go talk to, and they want a physical space to go in and see. And we've also seen, we have been growing our branch network lately as well. And as we put a branch in a space that has a lot of members already who all could have done all the things they're about to do, the second that branch goes in, we see deposits go up, we see number of loans go up, we see money move into the account, we see new accounts opening, and there's nothing preventing them from doing that digitally. But that branch, kind of gives that realness, that engagement center, that ability to have a place to go. And sometimes it's just that perceived, hey, I can go talk to someone in that space if I need to, even if they never take advantage of it. So our secret sauce, we have these branch networks, ATM networks. We have the ability to engage beyond just digital channels as well. So I'm going to start talking about some of the more specific partnerships we've had over the years that kind of touch on different aspects of building these relationships. So the first one you see here is a partnership with a company called Exogens. They are a behavioral banking company that ingest our transactional data and spit out some really cool things that run them through these models they've built up over the years. And these are all personalized and tailored to the individual members. This is delivered as a email monthly. We're working on some integrations with our conversational AI and also more broadly within digital as well. But in its email form, we've sent out this most recent month, we sent out 80,000 of these emails with a 63% open rate, which is pretty incredible for an email. It's something that our members look forward to. And since launching this to all our members at the beginning of the year, we've seen that open rate consistently be above 60%. So it is something that people are looking forward to opening and seeing. And it really does give you a good picture of what's going on with your money and gives you something to look at that's not just what is my balance. So you three examples. There are many of these. I think there's about 87 of these that we've created together. Some of them came kind of built in, and others have been more tailored to us as an institution and where our members spend their money. So you see the first one here is your Meijer checkup. So Meijer is a kind of like a Walmart, if you're not familiar, but kind of an anything one-stop shopping experience, largely in Michigan and the nearby Midwestern states. But you see, here's your lookup for the last 3 months. It tells you things like, you've done 14 purchases, spent $800. Your largest transaction was, on what date, and how much it was. Tells you how often you're going there. It tells you things like, oh, hey, you spent 4% of your income at Meijer. So those are just fun things. Again, people are looking at it, they're understanding, they're starting to see a picture of how their money is being spent. It's time to check your checking is the middle one here. You see, it looks like, and this one is, again, looking at the different data that's being fed in and then into the model and back. So it looks like over the last 3 months, your balance never dipped below $4,800. Using this as an opportunity to encourage that member to move funds into, a higher yield savings opportunity versus leaving in a checking account and getting 0% interest, or possibly taking that if they have debt, and paying off one of those loans with that money or some of that money to really help, them maximize kind of what they're doing in their financial picture, right? So there's that action button there. Some of them are just, informational. This one has an action button to go make that transfer now, and it will take you to the place in digital banking to set that up. You also notice there's the little react icon there. Those are, you can give it an emoji, happy face, neutral face, or sad face. And if you give it a sad face or thumbs down, then you're not going to see those insights in the future. So they'll pause those and bring in ones that are more relevant and pull for ones there. And another one you see here is called Smart Savings Hack. So buy now, pay later, a very popular thing for especially the current generation to be using as they're making purchase decisions. So Klarna is one of those. And you see here, congratulations, you paid off you made your final Klarna payment. It was $19, every 2 weeks. So, hey, let's keep that kind of pattern going instead of, making that payment. Now that you're used to spending that $19 every 2 weeks, put that into a savings deposit or into a deposit on auto in a savings account on auto deposit. And then you can kind of start to build it up. Then with the hope, next time you need a little extra cash, maybe you have that savings to pull from instead of needing to buy now, pay later experience. So this is one example. This is one that's very popular with our members. Again, it's giving us data, it's giving them access to unlock kind of their data. And we have this data, and we, have tried to do different things. We've built out a BI team. We've worked with different, individuals. We worked with companies like Trellance to kind of really help improve our data experience, but we've not been able to unlock things to this level. And this is because people are like Exogens are focused on like the behavioral aspects, and they have behavioral scientists looking at this, not from a financial lens, but how do people interact with things? So the word choice is careful. And really it is like having a conversation with your members here in a digital form. Another way we're engaging here is with a company called Larky. They do geofencing and push notifications. So we've had a local loyalty program for a number of years where members can, if they use their MSUFCU Visa or credit card or debit card at different businesses within the community. Some are, some of the chains or franchises like a Dunkin' Donuts, which is what you see on the screen. Or there are other ones that are more those true local small businesses. They may also be small business members with the credit union as well. So we're able to highlight and really draw attention to different opportunities to support our community this way as well. But a lot of these, because of how the program is managed before, people would forget that they exist. Maybe they didn't think to use their MSU card, or the employee didn't think or wasn't trained to know that, oh yeah, you get a discount for this. So by geofencing all the Dunkin' Donuts in this example in the area, when they show up after 2 p.m., they get a free donut with their drink purchase. So it reminds them as they get close. So, that way they remember to use that. And then, of course, by us encouraging them to use a card, hopefully that becomes kind of the norm where they're starting to use our card, expecting these discounts as they go to different places. And then our Visa Signature Reward Card has a grocery 3% cash back. So when we see people, this one's more time-based. This is, on a Saturday, 10:40 in the morning. People are going to, buy their supplies for the tailgate game and the game later that day. So let's encourage them, or maybe their watch party at home. So let's encourage them to use that MSUFCU card as they are going to go prepare for the game. So, trying to use both time-based and location-based services to really highlight different features of our products. And also another thing we use with this solution that's not on the screen is we use it for service surveys in our branches. So as members are leaving a branch, about the time they get to their car, they're sent one of these push notifications with the opportunity to take a quick survey. Just like if any of you have taken a flight and you've gotten that, you get off the plane and you have a survey, how would you rate this? So we have one of those that come through. We've tried to do that in a number of forums before, some being paper forms, different survey links, but we've gotten the best response rate and ability to actually get real data and actionable data by using this opportunity to both geofence and send these notifications out. This one's another more recent one. Debbie they call themselves Noom for finance. So if you think of, and for those not familiar, Noom is a behavioral-based program to help you kind of focus on nutrition and achieve your fitness goals, particularly in kind of eating and weight loss. Same thing here, but your financial goals, and you can be incentivized to kind of help and gamify the paying down of debt or building up savings. And what they've done and what's different between them and some other fintechs is really the opportunity to bring in new members. So they have a process where they've partnered with a number of credit unions, and should someone be using their app and going through this and then they want to open a product, they then are encouraged to open that product with the credit union that's identified based on where they live and where they joined from. And in order to use the app to its fullest, you have to have that credit union account in order to be able to take advantage. So what you can see things here, tell us what your dream offer would be, and that way, these are for like a debt consolidation loan. So we've been able to bring in an additional 2,400, we've brought in 2,400 users have come through this since launching earlier this year. Those are stats as of July. And then, of those 2,400, we got about 1,500 that were new member leads throughout the experience. So, there's not a lot of good ways to get new members these days outside of indirect. So this is another opportunity that's not an indirect auto, but someone who's now using something, telling them about how their financial picture is looking, giving them opportunity to improve it. And now you see it right there in partnership with MSUFCU. So we're telling people and educating and encouraging them and reinforcing that behavior, all while interacting with our brand as well. So again, using a partnership here to get people thinking about us, engaging, with us again as a brand, and doing more than they're able to do, on their own, and really giving them something to do with us versus just checking a balance. And another interesting thing that we saw here is originally we thought, we could help members pay off debt, but the thing that was really exciting, especially in the economic times we're in today, is once people started to pay off that debt, they were also able to start building up savings. And it was very significant how much these individuals were able to build up savings using this program after getting that debt paid off. So that was also really exciting for us as well. Again, helping two components of the financial journey for a lot of people. Then another one, this is more a technology partnership. So Ascent is a permissioned data platform They do a lot of things, but really what they are able to do is they're able to kind of bridge maybe a legacy technology stack or pieces of legacy technology within your tech stack, and quickly make connections to external data sources like Experian or QuickBooks. They're able to create forms and make it easy, and it's a no-code platform. So to some extent, people in the business units departments are able to spin up different things and create things without needing to have like a heavy tech lift or have a vendor come in and create, solutions. So you're able to create your own bespoke solutions to really take that digital transformation, that digitization of a lot of processes and increase that operational efficiency by adding these as kind of to the side things that then are integrated back into your digital banking. So you're able to then, loop them into your core system, into your CRM on the back end, and do things like, what we're really excited for, and we're about to launch this, but haven't quite yet, is there are a lot of, I think gig economy workers that make up about 30% of the workforce in some capacity. But they don't necessarily have W-2 income in the way that our underwriting models look for. So what we're very excited about is being able to use these different data sources to do that cash flow based underwriting. So we're able to get these gig economy workers into those retail products that they're being told no today. So we can get them into that car, we can get them into their first house, and it really help them, work in the way they're working, and also bank with the way that then supports how kind of these shifts in how people are working today with the gig economy more and more. Really makes it a lot easier for us to get those people in loans. They have the cash flow, but we're telling them no just because they don't meet the right check boxes. So very excited about that one. Another one that's been very and this is really more to the customer member service side of things. We have a partnership with Boost AI, who has helped us stand up our member-facing conversational AI or chatbot, Fran. So Fran is named after our first CEO or credit union manager of the credit union back in, I think she's moved into that role in the 50s, but she's been with the credit union. She was the first employee of the credit union, first manager. Everyone was volunteers up until that point. So to honor her and to kind of carry on our legacy, we made Fran the name of our first digital conversational AI as well. So we partner there. You can see there's a number of different things you can do. Fran takes on the work of about the number varies, but roughly about 60 individuals, 60 FTEs from our e-services team who does live chatting with members. So because of that kind of automation and as we started to turn on Fran and do more and more, the most interesting part about a chatbot for your members is that everyone will ask them what they think it should tell them. So you start to understand what are your members really trying to figure out. And before we were able to, and we set out initially to provide 24/7 access to information for our members and have that 24/7 service. We can't staff a call center that much. We're exploring, do we do that? Do we have some level of service overnight? So as we rolled this out, we found out that most people overnight are mostly looking for our help with like Visa card transactions that were blocked or they lost their card or something. So being able to build in and automate some of those features within Fran, we were able to address those needs in the moment versus having to hire extra people or run a call center for more hours to be able to do so. That was very helpful for us to make that understanding before making the investment in creating this full call center. And our members absolutely love interacting with Fran. She takes on like 200,000 or 300,000 chats a year, and only growing every day. And we're adding more and more features in there. Recently, we've added the ability to get some behind the login type information. So you see very much here's account number, tax forms, kind of some relevant information. But once you're logged in, or if you log in Fran, you're able to get things like your balance, transfer funds, figure out when your loans due, make a loan payment, things like that, using this more conversational format. To complement Fran, we also have an internal conversational AI named Gene, or Gene, kind of like DNA or short for genius as well, because really it's like the core of our knowledge base for the credit union. And we used to have these 20, 30, 40-page Word documents on how to process the wire, and the call center would have one version, and our chat team would have another version, the branches would have another version for different processes. by taking them and putting them in this conversational format, we're able to help our employees get quicker access to this information, and they're able to, be, as people are also, again, changing how they work. Maybe people aren't a 20-year call center employee. They've worked in the call center for 3 years. They move on. People move around with training a lot. It allows people to more easily find the information, get trained, reinforce that, and then also get a more consistent answer on what those processes are by being able to find them here. What we were doing before, the agent that was on the phone with the member would have to put the member on hold. They would call over to like the call center helpline where there were trainers or senior call center people. And based on the experience of that person, they would tell you the answer of what maybe they remembered it was, and then that person, and we found that members were on hold up to 8 minutes during that process. So by allowing the employee to be able to get this information kind of at their fingertips as they're chatting through, the wait times went down. We were able to serve members more effectively. Again, building those relationships both in a digital means and also helping the employee help the member using digital as well. One thing that was interesting to note is, when members interact with Fran, they ask more, maybe longer, more verbose, like as you would speak questions. The employees started to figure out how to do it like a call tree when, you press one for whatever, so that they know, if you're looking for loans, instead of saying, how do I process a wire? They may just say wire. And then down below, it would give you these options and you can start to click through to kind of get through. And for the employees, we also put in a conversational format so there's not too much on the screen at one time. It's kind of like if you've used TurboTax, or I'm sure H&R Block's software does the same thing, where they kind of walk you through step by step, one piece at a time. This is that format as well. And again, you see the thumbs up, thumbs down to give feedback on what's happening. The members get that same option as they're interacting. And then again, able to build that experience and relationship there through AI. Here's the full list of partners we have in the fintech ecosystem. I'm not going to walk through all of them. There's many on the screen. Some are things that we've invested in through Reseda. Those have the little Reseda logo next to them. Things that are surrounded in green as the background are things we are actively piloting. Things that are with a gray background are things that we've tested and then decided that there wasn't the right fit for our membership, or there wasn't enough usage, or there just wasn't the right economics or ROI for us to offer it beyond pilot phase. So in order to kind of form these strong partnerships, we're looking for these companies that we're working with to be true partners on the other side, work with us, help us understand, learn us, understand what credit unions need, what we need, specifically what our members need, and be responsive to that and make changes and really help us see how their software, their program, their solution can really best serve our members. And we have the opportunity to be partners back the other way as well. So a number of different categories. I'll leave this on the screen for a little bit longer in case anyone's reading through it. But there's a number of different things in here across the gamut of services. And, most credit unions are not large enough to do this all themselves. So really finding partners that align with our values and our kind of cultures really allows us to be and extend what we offer and be able to compete with, the digital experiences that our members are seeing from, Netflix and Amazon and some of the other things they interact with daily. And also we're also competing with, the big banks and what they're able to bring to the table in digital. There's that expectation that you have this very robust technology stack because, that's what they can get from, a Chime or even a Citi or Chase as well. So we are not competing with each other in that sense, but all these people have really strong digital components. So by adding these partnerships, we're able to extend what does that look like for us? And as I close out every presentation, so if you remember nothing else from what I've talked about, here's the top 5. So our consumers care about customer experience, members care about member experience. They will come back to the experience, how they feel, where they see they're getting the personalization. Personalization is everywhere. Members are experiencing it, whether it's through travel, your favorite retail site. There are people that are knowing how to engage with our members, and that's how our members are learning the world. And they're going to expect us to do the same thing. And whoever figures that out will be the ones that win in this space. By doing the personalization, making sure we're focusing on the experience, we will build these digital relationships We were doing it as institutions in person. We just need to translate this new kind of delivery of digital channel and really, curate that experience for them. Uh, Find the things that make the most sense, put things in front of them proactively, and help them discover the new things that you think will benefit them. And that goes back to the personalization. You have to understand, your members in order to get that from them. And then again, I said it before, I'll say it again. Our secret sauce, what allow us to compete, is having this, experience. We can go beyond digital. If you think about Apple, they're a huge tech company. They could just sell everything online, be super easy for them to do. But they built this kind of network of Apple stores. You can go and speak to someone. You can get education while you're there. You can come see the new products. Our branches can become that. Our locations can become that. Maybe they don't have to be branches. Maybe there can be some engagement centers that are really about, how do you engage with members with different products, with different digital things, where there's a lot more education happening in the spaces. Or a lot of us, coming out of COVID, have a lot more, space in maybe our headquarters building or office space that we don't need anymore. There's opportunity to utilize that to create more and more opportunities to engage with our members. So with that, I will move us to the question portion, and I'm going to maybe minimize this so I can maybe see everyone's. Yeah.
All right. So as Ben said, now is a wonderful time to ask questions if you have any. There is a Q&A little button that you can press at the bottom of your Zoom webinar, and you should be able to type things in. To get us started, Ben, I actually do have a question
Great.
kind of for the group. So do you have any tips for achieving buy-in from others within the organization about partnering with fintechs?
Yeah, absolutely. So I think, that's going to be a mixed bag. I think there's a few different kind of personas within most organizations. You got to be able to speak to all of them, right? And you got to be able to personalize the messaging to everyone there, and help them see the value. So some people are going to see the value in the numbers, right? Maybe the CFO types, people who are really strong on the data side. Well, how do you create a case or talk about like what this could look like, on the numbers side? So we do that in the pilots. We work with our finance team, our BI team, to create all these assumptions and then projections for what we expect to happen during the pilot. And then we use the pilot to validate if those assumptions were real, and if they are, or there's some form of it that was, we then have a numbers story to tell that audience. There's also the tech group, the people that are the CIOs, CTOs, maybe just in more technical areas of the credit union. We want to make sure it's secure. We want to make sure that we can do the due diligence, and some of the risk people get into that and legal. There does need to be a different approach to working with a startup, because many of these fintechs are startups, versus working through with your core system providers or your card providers who are very buttoned up. They got 200 lawyers that wrote a document package that you can just easily be like, oh yeah, they check all the boxes, great, we can move them forward. So fintechs don't have that. We're quite often working with them as the first client. So we're trying to help educate them what they need. How do they work in this space? They need things like a SOC 2 or ISO certification to demonstrate their security, and all these different things that check the right boxes. Or, we say, hey, you can't do these things with us yet because you don't have that certification. But, some things we've done to do that is, and we had to educate our team to kind of build this kind of mindset. But if we use something like a Plaid to allow members to permission their data to the fintech versus us making a direct integration, well, that kind of takes off the responsibility for compliance for us and put it elsewhere. And then, so I'm going to answer this one because it came in as I was talking about this, and I think it's highly relevant. But yeah, have you done all this work with the CFPB's rule proposal to open banking in mind? Any best practices or details there? So yes, we've done the work to create APIs to get our data out, and we worked with Plaid to do that initially. We're closely watching the 1033 rule. Our compliance team is monitoring that, and I've also joined some calls with Plaid because they're part of the Financial Data Exchange, or FDX. That's a good group to follow. So the new proposed rules involve someone being a standard setter, and I don't think credit unions are going to be able to have the resources to be able to be the standard setter. But this industry organization, that forum that has representatives from many aspects and components of the industry, and there is if you're not already part of it, if you've not heard of it, FPX is seeking credit union representation where you can be on the boards or the advisory committees within that to kind of help shape what does that look like. Yeah, we're building with it in mind. We're building API connections that allow for this data to be permissioned by the members and owned and then deleted when it's supposed to and appropriate. Then getting back to the the last kind of persona is that kind of experience side as well. So you got to be able to show how does this experience, how do you build the relationship, how do you engage the member, what are the feelings of the member interacting with it, what is their feedback, what are the employees feedback as they're using it, supporting it. So and also making sure to educate employees. One of our first partnerships that we did was a fraud security solution for cards. And because of how we managed it, I was early in starting the lab. We thought everyone would who was in the pilot would just email our innovation email or call this special phone number that we said, yep, call this phone number for help. Well, they contacted us, however they normally do. And we had someone in the call center tell a member, oh, well, we would never do anything like that. That looks like fraud. You shouldn't do that. Or that looks like phishing. You shouldn't do whatever that is. So, lesson learned that we also need to educate our employees what we're doing here as well. So they know what's going on, but also if they can use it, touch it, feel it, they can also then support it. And we've found that as employees get excited about it, there's no need to encourage them to sell whatever it is. They'll just sell it, full stop.
Awesome. Thank you for those two there, Ben. Really appreciate that. We do have another
Absolutely.
one coming in. Somebody's asking, does the increased member engagement balance the financial cost of having a partnership?
Yeah. So, none of these are free. So there's time to get these set up and, moving. A lot of fintech partnerships involve a per member per month fee. So you do have to do that work, and we use our finance team to help figure it out, and our BI team. So here's what we expect to be the result. From a financial perspective, here's the engagement stats that we're expecting to see, utilization stats. Did any of that happen? Did we see additional members come in? Did we see more opportunity come in? So just to talk about a couple different partnerships with some real numbers. We partnered with a company called Changed that when they started, they now do all loan types, but they were created initially to help students pay off their student loans early by rounding up transactions, on their debit and credit cards. We found that based on the number of users we had, paying their members that we have paying federal student loans, there's about 14,000. 10% of that was our estimate might possibly adopt Changed. And if those 1,400 members did an additional 2 to 3 card transactions a month, it would cover the cost of all the software, and anything above that would actually be increased engagement. I think we've seen about 17 or 1,800 members on that platform now, so we've kind of hit that. It took maybe a little longer than we thought to get there, but throughout the pilot, we saw things. We also had things like no one had to pay student loans for 3 years in since we started that. So it was also interesting to see how that kind of shaped what that looked like. We also look at Silver is another one. We had this pre-retirement education and targeting, the 55 plus crowd. What we get from them as a credit union, a lot of these members track their finances and their planning and spreadsheets. They don't want to link things via Plaid and all this other stuff. So, there's all this stuff out there that we don't have access to. Once they link those in, we're able to identify things that we could then target bringing over. And through the pilot process, we identified 1.3 billion in assets that those members had outside of the credit union that we could then run targeted campaigns to them to start to encourage them to bring those funds over to the credit union, especially as they started to consolidate accounts, moving to retirement. And then the last example I'll give to answer this question, another partner, Nichols, that we have, they help identify opportunities to target cards, to be third-party card debt that's out there and where our members are paying out to Discover or whoever, Chase or wherever their cards are, American Express. and then be able to run campaigns off of that targeted list to these individuals, and offer them either debt consolidation or our own card to move their balances over in a balance transfer. And we were able to open 25 million in 3 email campaigns over the course of about 4 months in additional loans on our books from that. So there is hard ROI to it. Sometimes it's not as easy to see. Sometimes you're looking at the engagement, how many users are using it, and sometimes it's okay to charge for these services. Quite often we'll pay for maybe the base level service, and a lot of these fintechs have like premium step ups, and we'll cover the base. And if you as a member want to use the other services, you can work on that and pay that directly through the fintech themselves.
Yeah, it definitely sounds like it's all a process, it's a learning curve, but it's worth it.
Absolutely. It is
All
worth
right.
it in the end. Absolutely. But they are not all winners as well. Maybe I'll answer that part of it as well. So you also have to be smart about it. And like
Mm-hmm.
sometimes it isn't working, and you got to be strong about saying, hey, this isn't working. No, there are no more tries. Because there's that, like, you do start to build these relationships, but at some point it's clear it's not working. So one of the fintechs on there that was in gray, you know, we got 87 members using it. The members loved it. We could never get more than 87 in 3 months of trying. We tried a couple different ways to market, engage. We just kind of ran out of ideas. So we were able to work out so those 87 members could keep using that solution, but it was no longer like officially something the credit union was paying for at that point. So we were able to kind of decommission it from one of our offerings, but the members that helped test it, they were able to keep using that because they really liked it. So
No, that absolutely. Absolutely. All right, I'm seeing one more that came in. Let's go ahead. We'll wrap it up with this last question then.
great.
So somebody's asking, is there a lot of prep work that needs to be done at the credit union to get ready to partner with a fintech?
Yeah, so some of the major prep work is really just having the mindset and support kind of from the leadership level. If it's not there, then it's not going to happen. So if the CFO is saying no, or the CIO is saying no, or the CEO is saying no, like, those people are going to stop this from happening. So making sure there's buy-in and there's this kind of decision as an organization to go do these explorations, then defining what does it look like to explore and experiment, and making sure to actually give resources, time, people, money that are dedicated here. And they don't have to be a full-time job. It can be something that is almost run like a project. Hey, this team is going to get together and they're going to work on this for the next 3 months, and then give them some output to come back. But really the main prep work is, once the first one's always the hardest, because you got to make sure everyone's on board. You got to make sure, like, your risk team, your legal team, your security team, and IT evaluating, doing vendor due diligence, like, they understand that this is a startup, right? And what does that truly mean? But then once you get there, then you can kind of pick what level of integration do you want. So some fintech startups require a full integration. They need access to core data. Well, that's going to look a lot different than someone that's a consumer focused or a direct consumer app that's looking to do kind of business to business partnerships to extend that B2B2C model. So you're offering your members something that already exists. That's a smaller lift, and really there's some more marketing communication work done to members and education to employees than really any actual work to be done. You also need to go through the exercise of defining what are you actually testing, and then coming back and seeing if what you said was going to happen did happen. And if it did, great. What happens next, and figure out how to move it on to maybe full deployment. And if it didn't, how do you end it? What's your end game? How do you shut it down and address the members that were using it so they know that it's gone away?
All right. Thank you so much for that answer, Ben. That was our last question. Are you good if we close it on out?
Good for my end.
All right. So we're going to go ahead and we're going to get a last poll here started. And as we conclude, we do want to say a huge thank you to all of you who have attended this fourth and final webinar in our 2024 Edge Encores webinar series. And of course, another huge thank you to Ben Maxim and MSUFCU for being a lovely guest host along with our team here at Trellance. As I stated at the beginning of the webinar, we will be sending you all a digital recording of this call so that you have it available to review. And last, a reminder that the Edge 2025 conference will be in Las Vegas, May 7th through the 9th. Mark your calendars and be on the lookout for more registration information coming soon. Thank you all and have a great rest of your day.